Oh, taxes. Who loves paying taxes? Right now, there are taxes in cryptocurrencies, but can we avoid it? Find out how! Stay tuned! Hi everyone, welcome to Crypto Intel. In this video, we'll share some great strategies that can help reduce your taxable amount or even pay just zero tax in cryptocurrency. Before we go any further, don't forget to hit like, subscribe, and notify to get more updates from our channel and become more intelligent about the crypto world. Okay, so we used in the first part of the video, we mentioned avoiding tax, not evading tax. That's because avoiding tax is using legal methods like loopholes or technicalities that we can avoid in paying taxes. First advice is to just not sell right now, especially in the USA because it is treated as a property. You're only taxed whenever you sell your crypto and realize a gain or loss. If you make money, the government will want their fair share. If you lost money, you can possibly use that to offset some of your other gains. Hopefully, if you've invested in a project you believe in long term, then you have no problem waiting to sell. You could wait to sell your crypto until a day comes where new crypto laws are passed saying that we don't have to pay any taxes or that we're just taxed in a more advantageous way. It sounds hilarious to wait now that I am saying this out loud, but let me tell you another reason why holding on to your crypto can help your tax bill in the United States. We have two classes of taxes. The first one is capital gains. It is making money by buying something and then selling it. In crypto, it means you are holding a crypto for less than a year before selling it. You will owe a higher tax rate by doing this. If you hold your crypto for longer than a year, it falls into the second category called long-term capital gains. Any property or crypto you hold for more than 1 year gets taxed at a better tax rate. The next thing you can do to avoid some crypto taxes is to simply get a loan on them, just like getting a car loan, with the car itself backing it. The thing here though is that this loan is technically not taxed. It means that you can access the value of your crypto without needing to outright sell it. So whatever crypto you believe in, borrowing against it can access the value tax-free while also letting that crypto grow in value. There are many strategies here, but you still have to be careful whenever you set it up. Next thing we are going to cover is a crypto Roth IRA. It is a traditional finance tool where the taxed part is flipped. Here's an example. When you invest $5,000, you pay taxes on it today so you don't get a deduction from your yearly income. However, if you retire and that initial investment has grown to $20,000 and you want to take out $4,000, you don't have to pay any taxes on the money you take out. Now I know this is a little confusing, especially if this is your first time hearing it. But the main difference between a Roth IRA and a traditional IRA is when you pay your taxes. You either pay them now or later. And there's no advantage to either because you'll end up paying the same taxes if you're in the same tax bracket when you invest and when you withdraw. However, if you think you're going to be in a higher tax bracket whenever you retire, you'll want to deposit in a Roth IRA to save money. On the other hand, if you think you'll be in a lower tax bracket, the traditional IRA is more advantageous. There is another advantage to a Roth IRA. It can technically be a savings account. For example, if you put in $6,000 this year and $6,000 next year, you'll have $12,000 total deposited. Since that initial $12,000 has already had taxes paid on it, you can take up to that much money out of your account for any reason at any time. You can basically have a crypto-based retirement account that can act as a savings account, which also is beneficial to your future taxes. The next we are going to cover is a charitable remainder trust. Just a heads up, since this is a very advanced strategy, it's best to talk to an accountant or lawyer. This is mostly used for accounts with over $500,000 of crypto. This is even highly recommended for people who bought Bitcoin a few years ago and are now sitting on a big pile of unrealized cash. This strategy requires setting up a trust with the help of a professional called a charitable remainder trust, and then you will actually give to this trust your crypto. There will be no tax that you have to pay whenever you give a quote-unquote charity your crypto. You will even get a tax deduction from giving that gift. Keep in mind though that there's a 30% limit of tax deduction from the total donation. So after you reach the limit, the next step is for Charitable Trust to sell your crypto. It has cash by this time. So you literally do not own any crypto, which means that you don't owe any tax. The trust has your crypto, but it sold it. So the trust has cash, but it hasn't paid any tax since charity doesn't really pay tax. The third step is to set up an annuity, or what we normally call a passive income. The Charitable Remainder Trust Annuity can pay you up to 7% of its value each year as an annuity. However, keep in mind that even if the charity isn't taxed, you are taxed on the value you're getting from the annuity. Okay, I thought we are avoiding taxes here. Well, you didn't pay any long-term or short-term capital gains tax, but what you owe is income tax. Remember when I said earlier that 30% can be deducted from the tax of your gift? You can technically split up this deduction between a 5-year period. So let's say 30% of $1 million is $300,000. If you split that deduction up between 5 years, you get a yearly deduction of $60,000. This means you can earn $70,000 from the annuity with a $60,000 tax deduction. You technically only have to pay taxes on the $10,000 difference, in which you have effectively avoided or transferred your crypto tax into income tax. And you have also created an entity that will basically pay you for life. Here's another tip. You can set up a life insurance fund with the initial annuity payments. You can use that to super fund in a way that the amount of the initial investment, or $1 million, goes to your spouse or whoever you want, whether it be a relative or a trusted friend. In case you pass away, your family or whoever you trust your funds to won't owe any taxes on this money. Another benefit here is that it's technically asset protected. So even if you declare bankruptcy or you get sued, nobody can touch this money or the annuity that is paid to you. And this is where we are going to end this video. To wrap this up, again, DYOR! Do your own research, as this is not a financial advice about legally avoiding taxes in crypto. We are just mainly sharing to you some strategies that we found based on our own research. It's best to do your own too. That's all for this video. If you learned anything from our videos or have any crypto-related topic that you want us to cover, feel free to comment below. Don't forget to hit like, subscribe, and notify to get more updates from our channel and become more intelligent about the crypto world. See you in our next video.